Ladies and gentlemen, my name is Viv Vipperman, and I'm excited to be back on the Backing the Bold podcast today with my guest, Jansen Hein from Steward Advisors Group. Jansen, welcome to the podcast.
Glad to be here.
Hey, Jansen, tell us a little bit about your background and what you're doing these days.
Yeah, started out on the accounting track. Still a licensed CPA. Went to one of the big four accounting firms. Audited private funds for a few years. Transitioned that into uh, the consulting practice there, working in the back office of big banks, big wealth managers, helping them solve problems. Did that for my 20s, rounding into my 30s, left there, and took a role leading the back office of a large institutional investment management fund. So all in across the different pools of funds, we were managing about 30 billion in assets, about 10 billion of that in the private alternative space, about 20 billion in global efficient markets, liquid markets, publicly traded markets. And my role was I ran the back office. So
Wow.
all portfolio operations, all finance, all accounting, all monitoring of those investments. So when the smallest check that you write is $30 million, you get people's good ideas in the private markets and public markets. So when I left, we've had probably 350 individual private fund allocations and deal allocations across every private asset class you can think of, which was a lot of fun to get to see the different ways in which you can make money and invest purposefully or not purposefully. Um, More recently transitioned. I do two things today. One, I am a general partner of a private fund management company. We invest in emerging and frontier markets, East Africa, Eastern Europe, trying to invest toward purposeful realities in different ways than Eagle Freedom, but in many similar ways. But more relevant to today, I am an advisor and serve as the chief compliance officer at Steward Advisors Group. We're a retail investment advisor firm helping individuals and households invest purposefully in the public markets and in the private markets, taking a lot of that institutional thought process and quality into everyday households, helping Americans primarily invest purposefully toward both their financial realities and goals and also toward purposeful impact realities and goals, which is how that we met doing some of the work you guys are doing at Eagle. So
Yeah, that's
yeah.
awesome. Thanks for sharing that with us. Excited to hear some of the things that you guys are working on. I wanted to dive in a little bit first to the personal side, and then want to talk to you a little bit about the things that you're seeing in the market and that sort of thing. Um, but first, tell the audience, why did you make the switch? You work at a huge financial firm. You're managing billions of dollars. Um, most people look at a job like that as the ultimate career path, and you're at the top of the game. Why make the switch to a smaller firm that's just getting started at the time?
Yeah, I had achieved the huge shop, great role, long trajectory, um, which I thought was the dream. And um, part of it, I think we like to think we're rational people and we make choices for rational reasons, but we're humans and we're deeply emotional. And uh, my thoughts inform my feelings as a general practice, but um, I guess it's one of the more irrational career choices that I have made. And I would say that the idea that capital is impactful is obvious to me. With capital comes power, influence, all those types of things, which
Yeah.
can be stewarded positively and can be stewarded destructively. And when I began to understand that I'm also a household with my wife. We have money that is invested in public markets and private markets. And um, when I started to think for the first time a few years back, maybe 5 years ago, 6 years ago, in the making of the money, can it be more than just passive? Can it be actually purposeful? And what might that look like for myself?
Hmm.
Even as a finance professional, that was an incredibly difficult path to explore. And when I found, when the founder of Steward Advisors Group, Don Simmons, wrote a book called The Steward Investor, and it gave language to my wife and I on in the making of the money, this can and should be purposeful. Um, and I went to him and said, I think I know what you're trying to do. That's very hard. Um, Especially if you want to democratize these ideas to the mass American population. The ultra high net worth communities are served if they desire these realities to run after impact and purposeful investing in public markets, private markets. There are people that can help you, but to democratize that to the mass public, that's hard. Um, you're starting a firm laser focused on that idea. I would actually like to be a client.
Oh, wow.
And so he immediately followed back, and would you like to help us build it?
Oh, interesting.
And then my immediate response was probably not.
No kidding.
um, but yeah, ultimately through conversations with him and his wife, and my wife and I, we became compelled by the idea of the firm and the ethos behind why it was being created. Um, and then we decided to be clients, and then ultimately kind of just couldn't shake this purposefulness around, and I want to be a part of it too. And so, yeah, that was summer of 2022. Tough year to raise a new fund. Management company, go straight to SEC registration. Um, but yeah, a lot has happened since then, but it very much going from a huge institution to a startup, even though that, Don has been a wealth manager for many, many decades and had a very sizable solo practice prior to launching Steward Advisors Group. But yeah, it's been a journey going from stable to startup land. I would tell most people don't do it, which I think is probably what you hear from many founders in the Freedom Fund and other places, unless you really feel called and purposeful about solving a problem or accomplishing an objective or changing a reality that is not as it should be in the world, which I know Eagle Freedom is so committed to.
Well,
Yeah.
yeah, I was going to say, as it turns out, most of the most of the people I interview on this podcast have already drinking that Kool-Aid. So we get the ones that have already decided to just do something crazy and bold and build it to solve the problem. So
Yeah.
it is a joy to get a chance to spend time with those people here, like you guys, about the passion around a topic, and then the game-changing moment where you said, "Hey, we're just going to go do this thing because it needs to exist. Like it's just got to happen." Um, well, talk to me a little bit about how it's gone since then. Have you guys been surprised by the people's interest? And I know we've had some conversations before where you seem to honestly be the finding people's been a little easier than you thought.
Yeah, in a world that is full of many voices, there are so many financial advisor options for those that are seeking support in managing their finances, whether it's planning or investing or whatever service may be needed or desired. Um, and part of me is there's an element of Steward Advisors Group preaches a slightly different vision of the world than is common. The vision that I grew up with doesn't matter if you're a member of the Christian community or not, the idea of maximizing financial return, minimizing risk, doing the surefire thing over the more exploratory thing. Those are all very normative in the investment management process, and a lot of that is not terrible. That's okay. Um, but this idea of introducing ideas of, well, investing is actually a purposeful part of our formation as people.
Mm,
Investing can be about, and perhaps should be about, more than just risk adjusting our needs and future desires, um, finding ways to accomplish our temporal wants and desires. It could be more, it can be more. And it can be a blessing, not just for us, but a blessing for others. The idea of investment as an outward facing opportunity to get to express our love and care for others. That is different than the prevailing American worldview, the purpose of investing, what can be accomplished through investing, excellent investing. And does excellent investing, will people be interested in an idea of excellent investing if you can invest excellently? And in certain specific investments, you may purposefully pursue a lower return profile if there are impactful realities that are being achieved through the execution of that investment. How is the general population going to take that? Is anyone going to be interested in this reframed understanding and purposefulness of investing? And I would say, to your question, it has been very interesting. I think the idea of investing purposefully is millennia old. It is not a new concept. America is not coming up with it.
mm,
Um, Although there is a really fun movement of people in the United States that are really looking at this closely where they may not have been before. We do get a lot of pretty quick no's. If this idea of purposeful investing, people meet us and they may be, you know, very interesting, very cool. Not for me. That's fine.
mm,
That's okay. But there's a gap that I see in what advisors are offering clients today. Um, I think a lot of people, and the data is very clear on what investors want. Um, they may not want to actively engage in decision making all along the way, and they may not want to look every day, but people more than less understand that where they can be purposeful, let's do it. Like
mm,
they desire that connectivity, they desire that purposefulness. If we can do good in the making of the money, why would we not do that? And I would say I have stories upon stories upon stories of meeting people that we didn't know from Adam or Eve. And all of a sudden, two or three conversations in, you're much deeper in a relationship than you would normally expect to be. And people saying things like, I've been looking for this for years,
mm.
or I've been really excited about this idea, didn't have language for it. Thank you for helping me find language. Let's go further and go faster, which I think has been very surprising. People that are approaching retirement, that have been working with an advisor for a really long time, that advisor cannot serve this ethos of purposefulness in investing. And before massive life transitions, where you would normally lean deeply into a relationship that you already have and have established for many years, them choosing to change directions, move to a new advisor that is able to offer a different worldview in the purpose of investing, even though some of those investment mechanics look very similar. That has been really surprising. I would say I'm a realist, very pragmatic. Some people leave a general, new introduction and they would say 9 times out of 10, they're going to be a client. I know that's not true. The data is very clear. That's not true. And I have just been pleasantly surprised that
Mm.
folks are finding their way to us more than we are going out and finding them in many ways, which is very much an affirmation that, I believe that that's an affirmation that the Lord is moving in and amongst people, saying, hey, there's an itch to be scratched, that there's more to be had from investing than just maximizing returns. minimizing risk. It's okay, and we should. I'm very much a let's make professional, eyes wide open decisions. But the conversation is more dynamic than I think advisors have entertained for a while. And it's really cool seeing investors and households push against that and say, we actually want more. And what a beautiful opportunity to talk about the more that we're really passionate about.
Nice. No, that's really encouraging to hear. Um, One of the things, like, talk to me a little bit about the types of things that you guys are investing in. So a lot of people think wealth advisor, they just think public markets. But for you guys, there's, a significant interest in alternative investments. I remember looking back at my wealth advisor for when I first, got a significant job and saying, hey, I want to represent my values. And in that case, my faith. With the investments we make, private markets at that time weren't even an option for us. We weren't accredited investors at that time. But even then, the public markets was interested, and he didn't have any idea that anything existed. And then, he'd been grown up in church. He'd spent his whole life in that world. He'd also been an advisor for 20, 25 years, but he still had no idea that there were things out there that could represent values and be aligned in more that way. And so I was the first person to ask him to go take a look. And he came back with a few things. And praise the Lord, more are out there these days. We're excited to see things like Eventide and, One Ascent and so many other organizations that are building these funds, Inspire, in their ETFs and stuff like that. But the ability now in the alternative asset space, these private markets, is really incredible to take it up a notch as far as I'm concerned about the impact. But talk to us a little bit about, the types of things that you guys invest in, so private and public, um, and then, where you tend to get excited.
Yeah, I've said so many times, I'm so glad that I'm mid-career now, not 20 years ago, because the opportunity, for so many reasons, which I won't get into, and if we want to get a little nerdy, there's a whole bunch of reasons underpinning it, but perhaps we pause on that. But there's so many ways to be purposeful, um, and one of those, like, let's go for every inch, right? Whether you're looking at um, a specific style box of publicly traded equities or bond funds or individual credit options that are publicly tradable, commodities, hedging, those types of things. There are excellent professionals that are taking an eye toward impact in all of those ways and places
Mm.
and spaces in all of those asset classes. And it looks different in different asset classes. And people's drive for impact can look different, um, which is wonderful. We need many expressions of that. And as an advisor community, there's never been a better toolkit in the public markets to help clients be purposeful. People say you can't invest excellently and values aligned. I disagree. And I like to think that I have the data to prove it. And if people disagree with me on the ideology, fine. But don't say something is impossible when it is. Um, but public markets is just the start. You can get nerdy for days in the public markets, and that's fine. I like some of that. Um, the thing that gets me really juiced about adding the idea of private markets to that is the way that impact is expressed or purpose and values alignment is expressed in private markets looks a little bit different. Um, and ultimately, I care deeply about the formation journey of our clients and the the more variety that I can provide to them in the ways in which they engage with their investments, the better. Especially if their investments are purposeful. And I think private funds give you a really beautiful way to live into that. Because ultimately, yes, I understand my clients' goals, I understand their objectives. I also want to understand their heart. Where do you give charitably? Where do you and your family volunteer your time and energy? What are some of those initiatives that have informed the career choices that you have made? All of those things, I think, when we understand them, can help us laser in on those specific areas that you are drawn to care about deeply and look closely at. Um, and oftentimes, well, let me rephrase. If and where we can find alignment investing into those realities too, it creates a beautiful connection point.
Mm.
If you care about refugees, for example, there are private real estate funds that focus on refugee housing in the US that are really, really compelling and interesting, both from an impact standpoint, I think, and from a return standpoint. If you care deeply about regions around the world, odds are there are private funds that exist where you can invest in companies that are trying to create those realities through profitable for-profit investment exercises, not just charitable ones. Let's look and explore that. Care very deeply about things that are deeply wrong with the world, like the human trafficking industry. What a joy to say, yes, very much give towards some of those realities where there aren't profitable solutions yet through for-profit or for-profit models attached to those solutionings. But wouldn't it be neat if you could invest toward that too? For most people, that's the bigger part of their available resources. What a gift to get to invest toward that. And in private funds, where you can create relationships with fund managers that wake up every day laser focused at running at those problems and challenges, and ideally getting to participate in calls, reports, et cetera, where you get to understand the hearts of the businesses and the leaders of those businesses underneath the hood of those funds. That is deeply transformational for us as the advisor and for our clients. We can facilitate that connectivity. There was a great decoupling or disconnecting of our relationship with investments when the mutual fund was established, and then the ETF and all these things. People don't even know what they're invested in anymore. Like, I'm in these 4 things, I'm in these 15 things, but you're actually in these 600 things or 800 things, and that allows for beautiful, efficient diversification, and that's fine. But it is important, I think, for us to not think that investing isn't impactful. It is in many regards. And to bring back together an acknowledgement of understanding what we're doing and why and what's under the hood. Public markets, you can do that. There's some work involved. Private markets, I think it's a little bit more, it's clearer and easier for clients to really dive in and start to understand the 10, 15, 20, 30 things that they're invested in this private fund. Versus the 100 things that they may be invested in this publicly traded thing. So anywhere that we can create purposefulness and connectivity, we long for that. And private funds, for those that are able to do that, I think is a beautiful way to create that connectivity.
Talk to me a little bit about the due diligence side of things. So, previously in your work, you were analyzing, big projects, you were looking at, other funds, trying to decide about those. You had to provide significant due diligence there. It Steward Advisors now. Talk to me about the level of due diligence that you guys are doing as compared, just to kind of say, hey, are we looking at this with the same kind of scrutiny? Are the same eyes, considering this thing that may have more impact? That sort of thing. Because I know a lot of times people kind of ask the question, this is impactful. Does that mean it's not as financially, an opportunity, or just, hey, I like that guy because, he goes to my church or something like that, but not, worried that maybe not looking at it with the same kind of eyes.
Yeah, it's such an important question. And both with investor communication in decision making on whether to, enter into these types of investments or not, and on the due diligence side for us as professionals that do that, I'm constantly balancing. I need to keep my head and my heart in check and in step with each other. Um, it is so, so, so important to use our brains and to be excellent, especially for those that are trying to be purposeful. It's a harder thing. It's harder, candidly, to be excellent and want impactful realities. It's an added thing to run after in investing, which is already hard. Um, but we have to do it with excellence. And also, we can't leave our hearts and our convictions and our, um, I believe, God-given yearnings. We can't leave those at home. And also, we can't just mindlessly follow those and not use our heads. And I don't believe that we're called to. I'm also not going to disqualify. My goal is to do excellent analysis so that we can present eyes wide open, unbiased benefits and potential trade-offs. What are we confident in? What are we uncertain of? But ultimately, it is not, I don't have a preference for my clients. I want them to process and wrestle with the ideas for themselves, and I want them to do that in an informed way and an open way in their hearts. And so that looks different for every single set of client relationships. Some people, I'm trying to get their heads to move forward to catch up with their hearts, and other people, their heads are there and they're just waiting for their hearts to come along. And different people are different journeys. That's fine, but the diligence has to be excellent, in my opinion. And I would, without getting overly into it, there are beautiful communities of quiet collaborators that are doing excellent diligence. When we set out on this journey several years ago, that you can do it alone, and it's expensive, and it takes a lot of time and energy. It's fine. That's okay. Or you can do it together for mutual shared benefit and interest, where everyone gives something, everyone sacrifices something, and also everyone gets something.
Can you clarify that a little bit?
Yeah. So normal business as usual is there are 6 or 7, we'll use 5 as an example. 5 different firms that are all wanting to offer their clients the best, the most unique, the most compelling. And what you diligence is your intellectual property. You own it. You own your diligence on those things. And so everyone is building their own investment lineup that's trying to be more unique and more purposeful than everybody else's so they can go out and win clients. Well, what if instead of that model, it's not you growing your piece of an existing pie, the number of clients that are out there that could be served, but the pie is increasing. And so it's okay for firms that maybe normally view each other as competitors to actually say, hey, wait a minute. I think there's more than enough clients out there for all of us to serve. Why are we not partnering together and everyone contributing to the diligencing of things? Some people are able to contribute people that have skill sets, and they say, hey, we're going to donate time from our people towards centralized diligence efforts. That costs us something. Other people are saying, we don't have people, but we can pay for that data. So we'll buy into the right to have this investment diligence done for us, which is done at an excellent level, that is done standardized across investment options that have a variety of different options, different asset classes, private equity, venture capital, real estate, domestic investments in the US, international, emerging and frontier markets funds, etc. The idea that if we actually are one body and we pool our resources together and work together as advisor firms, we can actually do things more efficiently, serve our clients better, if we don't view everyone that isn't inside of our firm as a competitor. And I think we have humbly submitted to that. There are other firms that have also submitted to that, and there are some that have told us we disagree and have chosen to not participate, which is fine. But there are some great firms out there that are partnering together to do excellent diligence. I think we're all a little bit different. We target different things. We have different underlying ethoses. That's fine. But the idea should be institutional quality in diligence. And also, I mentioned this earlier, not disqualifying things just because they don't look a certain way once you get through due diligence. I have a client that has chosen to say, hey, with a portion of my portfolio, not the whole thing, with a sleeve of my portfolio, I want to invest that sleeve. And the number one focus of that sleeve is impactful realities or the opportunity to achieve impactful realities. Financial returns is a secondary, third tier objective for this sleeve. Because I know that they are interested in investing in that way, I will present to them investments that I think have an opportunity in the private markets to be very purposeful, very values aligned toward the things that grip their heart, but may not have as high of a return expectation, or the risk that is associated with taking that investment perhaps is higher than it should be for the type of returns that they would normally expect to get from that specific opportunity. I'm not going to disqualify them from considering that, but I am going to make it very clear what the risks are and what the return expectation that the manager is achieving and the impactful realities. And ultimately, they can wrestle through and we can help decide together as a team.
Is it right for them?
Yeah. And so part of that is you need investments that cover off a variety of different impactful realities in a variety of different asset classes that have a variety of different return profiles.
So
Eagle fits very purposefully in each one of those areas.
I was going to say, talk to me a little bit more about that. So when you say purposeful, impactful, you throw those words out. Can you give me some examples across your portfolio, not just the one, but across the portfolio? What are some of the types of purposeful things or the impactful realities that your clients are chasing or interested in being involved in?
Yeah, absolutely. You hear a lot about the ideas of human flourishing. What are those tenets of things that will allow people to thrive, humanity to thrive as a whole? It's a world where trafficking doesn't exist because it's too expensive and traffickers can't make money doing it because it has turned into a non-profitable enterprise. That is a flourishing world. What a wonderful ideal. You look around, let's look around, let's leave the US and say, hey, the developed nations have poured an incredible amount of charitable capital into developing nations, oftentimes resulting in far less positive outcomes than they would have hoped for the amount of capital that's been moved there. Well, there's something about stable, quality jobs, efficient, approachable education, food stability, access to quality healthcare at affordable rates for different groups of people. The idea of letting efficient markets just dictate what goods and services people want. All of those require investment. The idea that getting behind founders that share your worldview and they're trying to express that worldview through their companies. That's a beautiful thing. And that can focus on, you can invest and be laser focused in your investment toward the health, the well-being, the formation of founding teams of companies, leadership teams of companies. And that can be one impact expression. You can look at what's happening within the walls of the companies that we're investing in. Investment managers building funds that are investing in companies that those leaders of those companies care deeply about how people are cared for inside the walls of their company. Whether that's ensuring that they're paid really well or that they have emotional support services, chaplaincy, those types of things available to them when life happens and they bring that to work. How do we love and care for our people well? That's a wonderfully different expression of values expression in investing. And also you can invest in companies through funds that say, yeah, business is beautiful and we want it to be sustainable, but that's a means to an ends of loving and touching the communities around us. So you can invest in funds that invest in companies, and those companies, yes, they have a good or service that they offer, but really that is a means to an end for them of loving and blessing their communities. All of these are different ways that you can be very purposeful in aligning impactful goals that investors have with investment selection choices. And you can get more nuance into all of those. I believe that there's a spiritual component to that as well, that the Great Commission and the Great Commandment both matter deeply. Loving the Lord and loving our neighbors really, really, really well. And different fund managers are investing in companies purposefully Some more focused on the love the Lord part, others more focused on a love your neighbor part as an expression of their faith. And I'm fine with exploring both of those realities with clients. And again, it's leadership teams inside of companies, outside of companies. The expressions are numerous for which you can pursue that, which is a lot of fun.
So one of the things I'm interested in, when I worked in the real estate investment industry before, I was approaching a wealth advisory firm, not unlike y'all's, similar backgrounds. And we had a real estate product. It was investing in, apartment complex development. There was a unique component where they had a ministry opportunity in the apartment complexes through Apartment Life, where they just really wanted to care for the apartment dwellers really, really well. So they wanted to build a great product that was very successful, but they also wanted to care for the people that lived in the apartment complex. And I presented it to the wealth management firm, and they said, "Hey, this sounds really good. Talk to me about the returns of the product." Um, because at the time they were investing in I think it was a Blackstone deal. They were returning, 18% IRR year over year pretty consistently. It had about $1 million hurdle to get in, as in only clients that could invest $1 million had access to it, but it really had no impact, aside from the fact that it was providing good housing for human beings, which is an important thing to do, right? Um, and so he said, talk to me about how the company's been doing, how these properties have been working before we consider the impact component. Now, fortunately, at the time, the firm that I was working at was pushing mid 20s or above for their IRRs. So they were really doing a great job. The hurdle for investment was actually a little lower. It was closer to 250 to $500,000 investment. And the guy said, "Wow, okay, now talk to me about the impact." And so it was fascinating. Again, the big thing they wanted to do is make sure that there was a match in what was standard in the markets. And then once we had proven that that was possible, then they said, "Okay, now let's talk about the impact component." Do you find people responding that way when you present them new fund opportunities, and the types of things you guys are looking at, or what's the way the brain processes? And I only say that to say, um, when we started Eagle Freedom Fund, we went for quite a bit at the very beginning because people had a hard time on, thinking, with their not impact philanthropic mind. We would tell the cool story of the impact or a cool story of the fighting the human trafficking. And they were like, "That's great. Let me donate some money," kind of an idea, instead of, "Oh, this is an investment. You're really talking about those same investment dollars." Um, versus once people start to understand, the business opportunities that the companies are providing in the, we'll say, counter trafficking or human crimes kind of space, it started to make more sense for them as an investment. Um, but as you guys are talking to people, what does that process typically look like?
Yeah, it's a great question. And of course, it's unique to every investor. But maybe I'll just use my story as also a personal investor, and my wife and I on our journey of investing. Um, we have been trained from such a long time, from being, little, um, even up to recently, and I still wrestle with this idea of like, we like to have nice little siloed buckets. That's how our brain is programmed, right? Let's put things in nice categorization filing systems so we can reference quickly, so we can make quick decisions, so we can only focus on new information that is helpful for us in navigating life. So we have this beautiful bucket for investing, this beautiful bucket for charity, um, and the ideas are held separately. Um, Blending those together is very challenging for us when we have purposefully siloed them. Um, One of my mantras a few years back that I still come back to, that I still am challenged by, it's like, if everything that I am and everything that I have and everything that I have authority over is not mine, but actually is the Lord's because I am His, what a gift from Him that I get to be His. So everything that's in my custody is His too. How does that change my relationship with all of those things? My family, house, relationships, investment account, checking account, credit cards, etc., car. And then how do I actually live any differently than anyone else that doesn't have Jesus as Lord? And then all of a sudden, these silos that we have stop working so well. I was like, well, I don't think he views my investments as secular and my charitable giving as sacred because the IRS will give me a tax write-off for some of the charitable stuff and not for the investment stuff. Like I don't think he fits in my boxes. What do I do when he doesn't fit in my boxes? Is he wrong, or do I need to revisit some of these things? And it's really in the messiness of taking down some of our shortcut silos and saying, like if you read the book Faith Driven Investor, they talk about one pocket. Uh, Everything fits in one. Well, that's kind of scary, right? Like if I pull from the same pocket for giving, for investing, for, my wife and I bought a home and we had some money that was invested purposefully. And we were like, well, we do feel like the Lord wants us to have more than 850 square feet so we can have a dining room table, so we can entertain. That's something that he had put on our hearts. I was like, Lord, is it okay if I do less investing and put that into the walls of the house? And what I felt from him clearly, and my wife sensed even more clearly and was helpful in helping me walk through, was he's like, it's God's money if it's in the investment account. It's his money if it's in the walls of the house. It's his either way. And so it ultimately, in getting to your question of how do we deal with this whole, it's easier to give towards something that's impactful. It's easier to start with returns if it's investing. I think really it's being willing to be on a journey with him to say, how do I not force you into the buckets that make my life easier to process? I'm not saying we chuck all of our buckets out the window, right? It's okay to say, let's try and live in some of that gray. Like, what do we do with that? I do think it's kind of intellectually foolish to say, hey, let's make as much money as we can over here so that we can give a portion of it over here. If in the making of the money, you're actually supporting some of the initiatives through for-profit enterprise that you're throwing pennies at to try and solve charitably, I think that's illogical. I don't think that's how he sees the world, how the
So
Lord sees the world.
say that one more time, since somebody might not be able to see your hands moving as they listen to a podcast. In the sense of that discussion between the where you're giving, where you're investing, and how those might be cross impactful.
Yeah. If I don't have any purposeful intentionality in how I am investing toward the accumulation of money or resources, assets, sometimes, unfortunately, we're actually participating in destructive things. We just don't know about it in the making of the money. To then turn around and say, hey, I'm going to donate some of the earnings that I've made from making money toward charitable causes that are trying to solve some of these systematic problems. Well, if the majority of our wealth is invested, not given, and we're not being purposeful there, it's possible that we're actually backing to make money, destructive things, and then we're throwing pennies at people that are trying to solve some of those broken things.
Yeah.
And that just doesn't make a lot of sense, but it's easier for our buckets. And I think we're drawn towards simple, especially if we're doing it ourselves, or if we're, as advisors. I'm going to speak to the advisor community for a second, for which I am one. It is simple for us to not ask those extra questions. Look at financial returns. It's very tangible. It's very purposeful. What's your track record? What's your risk adjusted? Blah, 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 blah. What are your other funds doing, et cetera, et cetera. And yes, do your math. Be excellent at analyzing data that exists. Takes more time, takes more energy, takes more money, resources, candidly, as an advisor, to go deeper and say, and what impactful realities are you running after? When you start asking those questions, you'll actually find some really interesting things. You'll find publicly traded mutual fund and ETF providers that care a lot about what's in their portfolios. You'll find ones that say, we have been blessed immensely in the management of resources. All of the fees that we obtain from, strategy ABC, we actually give those away because we have been blessed more than what we feel is reasonable, and we want to give back. And you can say, oh, if I have 7 hedge products that I could pick from, why wouldn't I pick the one that gives away a lot of their profits toward purposeful things if they're all acting similarly? It's more work for an advisor to do that math, to do that work, ask those questions. But I think there's a beautiful opportunity to be different, not to be less in quality, but to be different. Um, in the private markets, there's incredible opportunity for that. It candidly, for those listening that don't understand, most advisors in the US legally can't talk about private funds. So that might be why you're not hearing about them. Or if they can, candidly, it's more expensive to offer private funds to clients. It takes more technology, it takes more expertise. There's a lot of reasons. It's less efficient. There's a lot of reasons why an advisor is disincentivized to raising these conversations with you as clients. And also, there's some amazing firms out there that are walking into this and saying, that's okay. Like, we don't have to make the most efficient business decision if we're called to a beautiful conversation of values alignment. Private markets is such an important part of that. Um, so it's this decoupling of maximizing in one silo so that we can maximize in another silo. It's like, hey, what if we're open to tearing some of those silos down and playing in that gray? Jesus was a master of the gray, right? He was always finding himself in uncomfortable places, being not what the Pharisees expected when he was talking to those that knew religion and knew the law really well. He wasn't what they expected. And also, he honored those in communities where they were often overlooked. He talked to tax collectors. He hung out with prostitutes. He hung out with imperfect people. His followers were not awesome. Fishermen were not the highest uh, elevated group of people to pick disciples from. He hung out in the gray all the time. We can do that too through investing, which I think is cool.
Look at that. I put my mute on for a second. Sorry. It's amazing to just to hear the thoughtfulness is what you guys are approaching these different types of products, the type of folks that you're investing with and investing for, and the different folks that you guys are representing as clients. Um, Continue to be encouraged by the way that you're pushing the edges on what it means to be a good wealth advisor, right? And help your clients flourish. I'd love to finish off, if you would, tell me a little bit about where you think the future of this thing is going. I mean, Steward, you said started 3 or 4 years ago. Since that time, there's more and more firms kind of paying attention to the impact that can happen in some of these, funds and these firms. There's obviously more funds that exist today than existed, a little while ago. But if you would just close us off with some of your thoughts about where these opportunities are going.
Yeah, I mean, I do believe that the Lord is stirring his people, um, which is beautiful. Um, people are people that have been professional private fund managers their whole lives are starting to feel hollow in just making money and are starting to say, hey, we can be impactful in this. Folks that have been ministry focused for a really long time, thinking God can only work through nonprofits, are starting to say, wait a minute, how do we partner in the profit and the profitable for-profit space toward sustainable solutioning? Investors are starting to wake up and say, I want a bigger conversation. And I know that takes more time and it's more meetings with your advisor and it's processing emotional things, not just mechanical things. And are we okay about that? But the only thing that I can understand that brings all of those realities together with increasing veracity and momentum is the Lord is moving in his people. The Lord is moving in some they understand, in others they don't. They just feel this draw. And that is a beautiful thing. There's so much mystery there. But so I believe that there is more momentum, not because we are smart, not because we are awesome at what we do, as those that are looking at this topic, but because our King is purposeful. With that, I think there are things that are needed. It is still a growing and emerging investment landscape in the U.S. More products need to be happening, need to be coming to market in the public markets and the private markets. More accountability needs to be presented and formalized and reported on as it pertains to impact. We don't want to go down a path where there are no definitions, where there is no ability to hold people accountable, maybe not to outcomes, but definitely to inputs and those types of things. So there is a lot of maturity that needs to happen. But I do see that the Lord is moving, and so that will inherently give momentum. I just hope that we do it as a body. I mean, when I look at it, is such a bummer the way even just within the U.S. denominationally and amongst different faith communities, we just don't play in the sandbox well together. Then you add the global impact or the global community, and gosh, we don't even talk to each other. And a lot of that is the Americans are not willing to listen as equals, we have a huge part to play in that. But doing this alone is not as valuable as doing it together. Even if we don't agree, it's okay to not agree and still sharpen each other. And so I think there's momentum here. I think there's great opportunity for expansion. I think people will be drawn to this idea, and I think we will be stunted in that progression if we care more about our names, our titles, our companies, our profit and loss statements than we are about what the Lord is doing. If we care more about our denomination, our ideology, our worldviews than what the Lord is doing. If we partner, it will be harder. It might be slower, but it will be better. And I am really excited for communities like Angelo and Forge and Kingdom Advisors in the US and, big RIA emerging firms like Eversource and Keel Point and OneAscent. And there's so many fund managers. You've got, I don't want to list names because then I'll get in trouble. But there's so many people that see the world differently that are running after this. And I just pray that in the ways that we can partner, we choose to do that, even though it's harder. So I think the body wins when we operate together. As much as we see the challenges of that, it is better. But yeah, the short answer is in all of the ways that it is hard, and man, it is hard. This bit, it's beautiful. Putting yourself in places where you get to see God show up. And, the financial returns matter, sure. But seeing people get to engage the Lord through the execution of investment, through the execution of choosing what funds to participate in, or getting to hear about companies that are saying, hey, because we have values aligned investors behind us, we can run at the things that we care about and not feel like our investors are pulling us one way and our heart and purpose is pulling us in another. It just gets to add fuel to flames that I want to burn so brightly in society today, that I think we all want to burn brightly in society today. So, yeah, it's exciting. It's a ton of work. It's really beautiful, and it's a little bit messy, and all those things are fine.
Well, I love that you're willing to embrace the mess and keep pressing through when there's some challenges out there. So, dude, Jansen, thanks so much for being on the podcast today. Thanks again for Steward Advisors and all the work that you guys do to diligence funds and give people these opinions and recommend to advisors and all those kind of things. It's exciting to be building this ecosystem with you guys. So thanks for being a part of it.
Yeah, a lot of fun. Love what you guys are doing. Keep up the good work.